Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Nick W., Jeff S., Todd A., and Brent S. On the podcast today, we have returning guest with us, Mr. Brian Reinsborough, President and CEO, and also Mr. Chris Sembritzky, Senior Vice President, Exploration, is with us, representing ReconAfrica, an onshore Namibia-focused oil and gas exploration company, which holds concessions over about 6.3 million acres of untested and prospective oil and gas plays in both fold belt and rift basin styles within the region. Crossing the borders between Namibia and Angola, the company also holds an MOU over about 5.2 million acres of prospective oil exploration concessions. The company also has exploration concessions covering about 1.9 million acres in Botswana. The company is currently drilling on its Kavango 1X target in northeast Namibia. ReconAfrica is listed on the Toronto Venture Exchange under the symbol RECO, as well as on the US OTC markets under the symbol RECAF. Brian, Chris, it's great to have you guys back on the program.
Well, great. Thank you for having us back, and it's always great to speak to you.
Thank you, Andrew. Pleasure to be with you again.
Thank you for coming back. It's great to chat with you, get an update. Why don't we jump right into updates because the company did just come out with some recent news here, brand new. Definitely get back over to Namibia drilling in just a moment, but the company announced it has formed a strategic joint venture with Record Resources in the Gabonese Republic for offshore exploration at Block C7. Brian, why don't you go ahead and start to unwrap that transaction for us?
Absolutely, thank you. Yes, this is an important step for Recon to make this move offshore. We've been talking about this internally for almost a year now, and found the right mix of assets to take this step. We like Gabon a lot. The transaction itself really helps us to diversify our portfolio. It provides a risk spectrum of investments going forward where we allocate capital where we wish to, whether it's low risk appraisal, drilling, development options, and exploration upside on an area that needs some new data. So we like the diversification of the portfolio. We like the potential for near-term production. We want to use that production when it does come on to fund our growth program. Both in Namibia and Angola, and hopefully beyond that. Exploration is going to be part of our DNA. That's what Chris is really good at, and what I'm good at, and his team is good at. So we're not going to lose sight in that compass. A few other points I'd make about the entry into Gabon is for me, it was a fairly efficient capital allocation to get into it. We're getting access to almost 1,200 square kilometers of acreage in Gabon, shallow waters. It's not deep water, shallow water, so that means that the cost structure is a little bit more attractive. We're close to infrastructure, so there's a field in there I'll talk about in just a moment that we can tie into existing infrastructure. But our commitment is over 4 years, so we have some time to spread it out. And the first order of business is really putting some advanced seismic reprocessing, state-of-the-art technology to some older vintage data sets. And the way Chris and I look at this is sort of Gulf of Mexico 101. This is what parts of the Gulf were 20 years ago, where people were drilling on insufficient seismic data sets where you couldn't see things clearly. So we plan to go in and use the high expertise we have internally to reprocess data, crystallize some of the components of the plays, or whether it's the field, which is a post-salt section, or a subsalt around the salt bodies, or even some of the pre-salt, which is a very prospective sort of spot to go to. So this one has all the elements that we wanted at a good cost structure. There is a field on there discovered in the mid-70s. which has some oil in it. And we really want to dig in and sort of understand how we can commercialize that marginal field. We think it is commercial from the standpoint we've looked at so far. We're about 10 kilometers away from some infrastructure, so that means a low cost and short cycle time. And based on the offset fields and how they produce, we think this field may have the potential to get up to about 20,000 BOEs per day, based on those offset fields as analogs. Now, there's a lot of more detail to get into, which we plan to, but we like that component of the risk profile. And to me, this really complements what we're doing in Namibia. We're drilling a really high potential well there that we like a lot. This sort of complements that, and in many regards, the transaction in Gabon plays to our strengths. It plays to Chris's strengths, exploring in so many different countries around the world. It plays our team's strengths, and it plays to our reprocessing strength and to my strength as well. So I like all components of this transaction to move the company forward.
Chris, any just opening thoughts there on the transaction and how you're looking at this?
Yeah, thanks, Andrew. One of the things that we've been looking at over the past really couple of years is where can we get into an area that can provide us production fairly quickly. Well, that really takes you to former producing oil province or current producing oil province is what we have here. There's a lot of oil that's come out of this area. Just to the north of us, there's a number of fields that have produced a lot of oil, and those fields kind of range between 40 and 250 million barrels of oil equivalent, which would be recoverable. Total came out here really in the late 60s and started their exploration programs by shooting some seismic in the form of 2D. There's a number of structures that are very evident off of seismic, and all of these structures are cored with salt. So when Brian talks about Gulf of Mexico 101, that's really what he's referring to. There's a lot of structures out in the Gulf that are really controlled by the movement of salt, and that's what we see here. And typically what happens is you look at structures above that salt, it becomes a little bit more complicated as you go below it. But that's exactly what happened in the Gulf. We moved down deeper and saw different structures on the flanks of the salts and also on the pre-salt. And so what we feel is that there are really two major play types that haven't really been unlocked because the technology really hasn't been brought back to Gabon from places like the Gulf of Mexico. And some of the bigger players that were out here early have just moved on because of the size. So there's a lot of fields here that are probably not going to be 500 million barrels. And so some of those major players move on. And that's why you see players our size, players of BW size, Perenco, Moreland, Prom, continue to explore in this area. So we're really excited about being in an oil producing province. We've spent some time in a data room here in Gabon recently. There's 28 prospects that had originally been mapped. We viewed a lot of those prospects. We like what we're seeing. So we're ready to move forward. We're ready to acquire all the data that's on the block and start our exploration efforts. But as Brian mentioned, there is a well that was drilled in the 70s. We see quite a bit of oil in that column. I think there's some deeper oil to be discovered as well. So we feel like we're in a really good spot where we can start off with some pretty relatively low risk appraisal drilling and then move on to some of the other exploration themes that we see throughout the block itself.
Chris, thank you for that. Remind the audience here, so two different styles that could be potentially targeted here. Just give us a bit of a flavor on the difference in depths that we're talking about here on the two different plays, just so we can orientate the audience a bit.
First of all, just to kind of keep in mind where we're at, we're in shallow water. So, roughly 50 to 100 meters of water depth. So that alone is going to really help you with the cost structure. We're talking about 2,000 meters to get down into really our first targets that would be above the salt. Subsalt, you're probably talking about going another 1,000 meters, so 3,000 meters for potentially a subsalt play where you're actually going to encounter multiple stacked reservoirs. And so we've seen this throughout the region, and we've actually seen this on the block. When we talk about the pre-salt, so that would be the reservoirs that are below the salt itself. That's still relatively unexplored, but our partner in Namibia, BW, has had quite a bit of success in the pre-salt. Their blocks lie to the southeast of us, but the majority of the growth that Gabon has seen here recently has been derived from the pre-salt, and specifically with BW Energy. So I kind of give you a flavor of kind of the depths, but also a little bit of the play styles that we're going to see and encounter as we move forward with this block.
Chris, thank you for the clarification on that. So we orientate some of the folks there who may be new to the area or haven't put in some time there to take a look at some of these depths and where these different plays are. I appreciate the information on that. Brian, just going back to strategy here, how do you look at this as far as, you guys now have quite a pipeline. Namibia is still a focus, but just talk about, investors out there, shareholders, what this move means in terms of the total strategy and if Namibia will remain to be also a focus.
Yeah, no, thanks for that question. First of all, yes, absolutely, Namibia is going to be a focus. We have high hopes for this well we're drilling right now, and also for the rift play. Right now we're so focused on the potential Damara Foe Belt, which we think has world-class potential. But we have a rift to go back and explore as well. So we like that area a lot. What this move gives for us is the ability to allocate capital to different parts of the risk spectrum, and that's what you want to do. You don't want to be heavy-ended on the high risk component of the investment cycle, but what we want to do is have opportunities that have appraisal, low risk appraisal, risk profile, development wells, and then exploration that's medium level risk, ILX, which is infrastructure-led exploration, and high risk. So the optimal company will be able to allocate capital across that risk spectrum depending on what their needs are. This opportunity does that for us, and we want to get to a spot where we have cash flow, and that's what this field, Loa field, provides us. If we do a reprocessing and we like what we see, we will drill what largely will be a PUD well, up dip in the oil column, and bring that on quickly, and that cash flow can fund all the exploration in both this concession and Namibia and maybe elsewhere. So it's filling in the gaps. We do want to become a full cycle E&P company, and this is one step further in that strategic direction that we put in place almost a year ago.
Appreciate how you're looking at this and how you're putting together the pieces of the puzzle. One question more on the Gabonese Republic before we move on. Just give us an overview there for folks who may be not oriented to this country. Some folks probably can't point to it on the map. Just talk a little bit about as far as, jurisdiction, friendliness to natural resource development, and those types of things.
Yeah, no, great question. So Gabon is the country produces around 220,000 plus BOEs per day. So it is a producing province. We're produced for several decades now. It's the fourth largest producer in the sub-Saharan region. So it has an existing production environment in place. The government I found so far to be very open to investment. Like many countries in Africa, they had peak production many years ago and saw it decline because of lack of investment. We see that in Angola, and in Namibia, of course. But Gabon's going through the same thing. They're very open to new investments and transparency and regulatory reform. And we like what they've done in the last few years in that regard. It gives me comfort that some of our peer companies are in the basin. In fact, one of our largest shareholder is the third largest producing company in Gabon, BW Energy. But it's really dictated by Perenco, an international company out of France. A private company produces about 80,000 BOEs per day. BW produces about 35,000 BOEs per day, and Total around 20. So and it goes down from there. So the infrastructure is there, the industry is there. It's worked very well. There's been very few disruptions in the production streamline over the last certainly decade. So we like that continuity, but also Gabon's a little bit under the radar screen right now. So much attention in West Africa is going to Namibia with all the big discoveries offshore. Now Angola because of the great production opportunities there. So this is a little bit of a below the radar screen investment thesis as well. We like the entry point here. We do like the turn of commercial opportunities that I think is going to come our way. And being an operator, we now get access to those. We plan to build a business platform here of scale. And I think we have line of sight to do that. So we're in the right spot, the right time, with the right government, and hopefully have a successful program here, producing a lot of oil in the next few years.
That sounds great. It appears that the country definitely is friendly towards hydrocarbons and understands the wealth creation that brings along. So that's great to hear in this day and age. Fantastic. Chris, any follow-up thoughts there? And then we'll move on.
Yeah, I mean, really kind of following your piece there, Andrew. Gabon has been producing, oil and gas for decades, so they're fairly sophisticated versus, some of the nascent countries that we may deal with today. So processes on the regulatory side that those are very streamlined. Dealing with just for instance, picking up this block and how efficient that it went. These guys know what they're doing. Hopefully that just streamlines a lot of our processes moving forward. A very, very well organized group that look after the hydrocarbon sector, very efficient walking in to a data room, everything being lined out for us. It's really going to make our lives a lot easier dealing with a country that's very familiar with producing hydrocarbons as well as exploration.
Well, I'm looking forward to seeing you guys move this forward and progress here. Now we have another front of news coming on this and some of the work you guys are starting off here. And Brian's in the country now on this phone call. Appreciate your guys' efforts to bring this forward and kind of fill in those gaps, as Brian said. So we do have an important ongoing drill program at Kavango 1X, Namibia. Talk a little bit about the drilling progress so far, guys. Overall schedule. Talk about that into the end of the year. Brian, do you want to take that to start off?
Yeah, I'll start and then Chris can fill in the gaps. So we spud the Kavango West well at the end of July as anticipated. The drilling operations are going quite well. This is now the 5th well we drill in country with the same rig we own with the same team. So they're getting their process down really well. And we learned a lot from the Nagopo well we drilled late last year. A lot geologically, a lot operationally, and did a really deep dive on lessons learned. And I think the on-site team is very, very good. And they took those learnings into this existing well bore. And we're drilling a little bit ahead of schedule, which is great. We hope to be down at the next casing string here in within the next week, certainly. And that's right above the main reservoir, the Octavi. Keep in mind, we have a very thick section to go through in the main reservoir, the Octavi, almost 1,500 meters. So we'll be drilling that all through October. Still plan to TD the well in the second half of November, and hopefully disclose the results of this well soon thereafter, certainly before the end of the year. So I'm really, really pleased with how the team's performing. We've learned from the wells we're drilling, and those learnings are coming to fruition on this existing well. And both Chris and I we have a lot of hope for this prospect. It has a lot of things we like to see. And when you're opening up a play like we are in the Marifo Belt, you want to learn from each well. And Chris and his team, they learned a ton from Nagopo. And in fact, their learnings from that well really shuffled the drilling program around. If you recall, earlier this year, we were going to go to another prospect. And the results in Nagopo really pointed towards the Kavango West prospect as the right one to drill. And we like the look of the structure. We're shallower than Nagopo, which is going to help in the reservoir development. The seismic character really is dictating that we're going to have less faulting than we saw in Nagopo, where we got tripped up on the hanging wall section. And we really think the source reservoir pairing here is ideally set up to have a structure filled. So I like all components of this, and listen, we like Namibia a lot. We like the jurisdiction, we like the friendliness of the business, we like the ability to develop a discovery quickly, and we still contend if we find oil here, we're going to be the first oil producer in Namibia. So that's one of our goals.
Chris, follow up here. just give us your technical view on this, how you're seeing drilling progress, and then, of course, based on past results, why this location was selected. You guys pivoted over here
Sure.
to this. Just talk about that, and as far as what you're thinking on expectations.
Brian really covered quite a bit there, but one of the things that that we learned from Nangopo was really around the drilling operations. Now, this is really the first well that's been drilled since 1970 in this rock. And when I say this rock, we're going down deep into these carbonates that we call the Atavi, but we've got a really difficult section to drill through, which is called the Molden. And so our learnings from Nangopo really told us a lot about the rock as we received that. And we're trying to optimize everything that we can on the drilling side. So for instance, a lot of the rock and cuttings went back to our drilling vendors, and they really helped us develop, built for purpose bits for this rock. So when Brian is saying, the drilling is going well, it's actually going extremely well. And I think it's a lot of for this built for purpose type work that we've been able to do, whether that's associated with the bit at the tip of the spear, but it's also a lot of the drilling parameters that we've learned from Nangopo that we've been able to translate here to Kavango West. So things are going well. Yeah, so for the Kavango West, drilling is on schedule. We've said the mid to end of November is about when we should expect results. And so we're hoping those results come in and we can communicate those to the market. As far as the geology is concerned, Brian mentioned, we were planning on moving to a prospect called Kumbundu. When we drilled Nangopo, we had the seismic data really tell us, as well as with the operations, that we had quite a bit of structural complexity. And we saw a lot of that complexity going forward at Kumbundu. So that's why we made the shift. We moved up north 40 kilometers to come to Kavango West, where we see a very, very simple structure. We see that the faulting was going to be limited. The fracturing was associated with the faulting was probably going to be limited. And so far, what we've seen has really come to fruition. So again, a lot of learnings that we're translating. We can't tell you all of the details, but we're TD'd. Hopefully we've got hydrocarbons behind our belt, and we'll make that announcement when that time comes.
Good information. Appreciate your thoughts on this. Maybe we'll stay with Chris here, or Brian, you could take this, either one. Just as far as outcomes here, guys, let's just kind of put both outcomes on the table in terms of success, or maybe not success, but more learnings of the structures in Namibia. But just talk about the outcomes here with Kavango 1X, and talk about what the next steps would be with either continuance or off to a different target. Just talk about that, Chris.
With success here, we find oil and gas, or gas. Our economics suggests that, we've got an extremely robust project here. Let's put the success story in front of us. So we encounter hydrocarbons within the Atavi itself. What we plan to do here with this well is to go ahead and test that. How do we do that? We use essentially a device called an MDT. So we'll go down and test the reservoir. We'll have an idea of what the reservoir quality is after the logging is conducted. But what we'll do with the MDTs is we'll get an idea of what the porosity and permeability will be like, but also the hydrocarbons. How do we expect those hydrocarbons to flow, but also what is the phase of the hydrocarbons? Is it oil, is it gas, or is it a combination of both? Based off of that, potentially we'll come out with a drill stem test. So we'll take a fairly large interval versus an MDT. An MDT is just really a single sample point within the reservoir, and we'll do that throughout the reservoir at multiple depths. But with the drill stem test, you might look at testing an interval that's 10, maybe even 50 meters, and then we would get a flow rate off of that. And so that flow rate will tell us a lot about how much this well will deliver. In the case of success, we like what we've seen from that drill stem test. Then we'll move on to an appraisal well. So we might step 2.5 kilometers away. We'll want to move down structure. So right now we're drilling on top of the structure. We want to know how deep the oil column could go. So we're going to try to find that oil water contact, or that gas oil contact. When we drill that appraisal well, we'll also conduct a drill stem test there. and then we'll get an idea of how the wells are actually communicating. How are they talking to one another? And then at that point, we've got 2 wells down. We'll conduct, what we'll do is build a reservoir model, and that'll give us an idea of how big this container is. And then we'll have kind of an idea at that point, early days, what is the ultimate recovery of this potential structure itself. Now, keep in mind, this is one structure. We've mapped 24 of these structures through the Damara Full Belt, so this isn't a one and done. If we're successful here, we're going to have a whole lot of other prospects to move after. And I'll let Brian talk to this in a little bit more detail, but if you've got your 2 to 3 wells down in the Kavango West prospect, you bring in an early production system. We've looked at this for the last 2 years. How are we going to get our oil to market? We're going to put it on trucks and get it on rail and get it to port and get that oil on water. So that kind of gives you an idea of what that success case looks like as far as going from exploration all the way to getting the barrels to port and on water.
Brian, pick it up there and just talk a little bit about anything you want to add to what Chris said there, as well as just how you're seeing the commercial pathway. It seems fairly straightforward once you guys hit oil.
Yeah, it is, and we've thought of that quite a bit. We're lucky in that concession and Kavango West in particular is close to an existing highway, and this highway is a double-lane tarred road with 18-wheelers on it. So we don't have to build a large road and like that. We have access. But 120 miles away is a railhead called Guffentren, which goes to Walvis Bay. So we modeled initially, getting production up via trucking and rail, and we want to have cash flow from that asset to eventually build a CPF, Central Processing Facility, on the unit. And long term, we have the volumes pipeline to go to the coastline, but we want to get our product on water for international pricing. So we think we can ramp up to a fairly good level here fairly quickly just by virtue of being onshore, and cost structure is very attractive. And we model a total operating cost of about $25 a barrel. Half of that's transportation. So the economics of this thing are going to be really good if we hit what Chris is hoping to find on this prospect. Keep in mind, this is just one prospect of the Damara Full Belt, so we have around 24 leads and prospects behind the Kavango West well to mature. They won't all get drilled, but success at Kavango really opens up scale here. And as you mentioned in the introduction, we just signed an MOU on the Angola side for another 5 million acres, and that's early stage evaluation. We're sending crews in country right now to start, or soon, to look at oil seeps, and then if it works out, we'll then initiate a seismic program. But if we have success here, we want to create as much running room as possible to maximize the value for shareholders.
The discussion of the commercial pathway is excellent, especially for the newer audience who is new to ReconAfrica and what they're doing. And then, of course, a new audience to the podcast who are listening in for the first time. With that, Angola, you started to touch on it, Brian. Any updates in Angola? And let me also just couple this with community alignment and government support updates across the jurisdictions. Go ahead and take that, and then we'll get Chris's thoughts.
Yeah, no, absolutely. We find Angola a great place to invest. They are, I think, the second top producer in sub-Saharan. They've been producing for a long period of time, a very sophisticated commercial and regulatory system. So we're working very close with ANPG, our partner on the MOU. Chris's team actually meets every 2 weeks on this project. And step number 1, as planned in the MOU, is for us to look at oil seeps over in that part of the country. And we're actually going in as part of the scouting process to start our stakeholder communication. As we did in Namibia, we take that communication very seriously, and we want to make sure the communities that we're working in understand exactly what we're doing and how they could benefit in the long term. So that process is just starting in the next few weeks in Angola. But on success, we want to build a business in Angola in all parts of the business cycle there. And we'll lead by ESG, as we did in Namibia. It's part of our core values. It's part of our DNA. So part of our commitment there is to help communities just as we did on the Namibian side of the business. So We're very proud of that part of the business, and wherever we land, whether it's Namibia, Angola, or Gabon, that's always going to be part of what we do and how we do things right.
Additional thoughts there, Chris, as far as what Brian said, and then also with your frequent meetings in Angola, how are you guys looking at that as far as putting in Angola as part of the progress of work?
Yeah, Andrew, I mean, keep in mind, our MOU area in Angola is just to the northwest of the Demerara Fold Belt. The folds don't stop at country boundaries, and that's the reason why we're there in Angola. We think this fold belt continues on to the northwest. We also think the rift continues to the northwest. We have quite a bit of data that we call, gravity magnetic data that suggests that both of those systems are in that area. Another thing with ANPG, who is our partner here, is also they're very, very familiar with the oil and gas industry. So they've done quite a bit of work in this area. So we're working in conjunction with their data as well as the data that we're acquiring, to get ready for a seismic program. So if you remember within the MOU, essentially we're doing a geochemical study where we go out and sample the surface for any hydrocarbon seeps, whether that's oil or gas. And so really what we're doing there is we're putting a wide net of, call it 75 to 100 different sample sites to where we can see if any of these seeps are available to us like we were able to see in Namibia. And then that'll really kind of dictate a little bit about how the seismic program is laid out. So we plan to shoot around 700 kilometers of 2D seismic. That doesn't sound like a lot, but these structures that we see are so large that we don't need a whole lot of coverage. So this is really kind of a reconnaissance seismic program. If we're successful here at Kavango West, we'll take our learnings to Angola. We'll identify where those structures exist with the initial 2D, and then we'll go in and probably refine with additional 2D, and then eventually a 3D seismic program. So it's really built for purpose for, let's see if we're successful here in the fold belt, and we're going to go chase more big fold belt structures. As mentioned, there's about 24 leads and prospects in the Demerara. There's going to be probably that many more between where we're at today on the Namibia acreage all the way up into Angola. So that's really kind of the strategy behind why we're there in the MOU. And so far, everything's going really well with the progress there.
Chris, thank you for that. Looks like we'll have some more work ongoing in 2026 with that. And so we'll look forward to more news coming on that front. On capital structure, Brian, just give us a quick update here as far as where we are on shares outstanding, the current cash balance to what you can say on that, and also remind the audience of the key shareholders on the roster.
Yeah, no, thank you. So right now we have about 300 million shares common outstanding, and fully diluted, we're just around 400 million. So a good spread in shares. In terms of cash balance, we have about 17 million Canadian as of the end of the second quarter of this year. So we're in a good spot there, and I'm very pleased with the cash position of the company. We worked very hard at that in the last year. In terms of shareholder base, listen, we have a very long-standing and loyal shareholder base. It's been changing over a bit over the last few equity rounds we've done. But we're very pleased. We have a very strong IR stakeholder communication plan that we communicate with our shareholders very regularly. But our major shareholder is also a partner. If you remember, BW Energy is our partner in Namibia and in our MOU, but they're also a major shareholder. So we communicate with them very, very frequently. In fact, when we're drilling a well, I think Chris talks to BW probably every day. So we're happy with them to be in a major shareholder, and our partners in Namibia are BW and Namcor, which we're super happy with that partnership as well.
Well, Brian, I'll start off with you and then we'll jump over to Chris. But just to wrap up, any final comments, anything that we didn't cover today that you guys want to bring up, thoughts on the oil market today, if you want to add that. And then for potential investors who are listening in, ReconAfrica Africa has a market capitalization of about 180 million Canadian dollars. Why should ReconAfrica Africa be considered within the institutional, family office, and retail investors portfolio at this stage?
I think Recon's in a great spot. We made this transition to Gabon very strategically. It gets us line of sight to production nearby. We have immediate activity in front of us. We like the cost structure. We like being close to infrastructure. And we like the pipeline of opportunities behind it. So we're in a good spot right now for this one. In terms of going forward, Namibia is a big part of our business as well. We expect to have success on Kavango well, and if that's the case, we're going to be in a super spot for growth for our shareholders. In terms of the overall market dynamics, the price of oil softened up a bit in the last part of the year, but we're in the high 60s of Brent oil, and that's a good place to make money. We stress our economics all the way down to much lower. So we tend to invest on assets that have very low break-evens. Onshore Namibia is an example of that. The break-even is really low because of the cost structure. Gabon is consistent with that theme. We're in shallow waters. We're close to infrastructure. The well cost there is sort of similar to what we're drilling over in Kavango, around $15 million a piece. So that cost structure is conducive to giving great returns. So, we think we have the right mixed portfolio here. We like where we are, and we like financially where we are, we like technically where we are, and we're in the right part of the cycle to invest.
Chris, anything to add, and then we'll wrap up.
Yeah, I think just to summarize, we're really working to be kind of a full cycle company, exploration on to low risk development. And I think now with Gabon coming into the mix, we have that. I get excited about the exploration side of things, and the Damara Full Belt is, it's really a remarkable trend. We've talked about this before, Andrew. We've got majors chasing, 250 million barrel fields offshore, but the cost structure is so different when you're in these deep water settings. For us to potentially drill a well onshore Namibia for $15 million, but also looking at third party resource potential of over 300 million barrels in one structure with, again, maybe 24 more of these, plus more when we move into Angola and start acquiring data in northwest Namibia. To me, this is just really, really exciting stuff, and you don't get too many times in your career to work areas like this. But coming to Gabon, again, we've got a well with oil in it that was discovered in the 70s. Really low risk offset here that could take us to production fairly quickly. So, everything's kind of moving in the right direction at the moment. Hopefully we have success in Namibia and then tie that in with Gabon. This could really be a strong and interesting company here in just a few months' time. So looking forward to the future and catching up with you again, Andrew.
Chris, thank you for that proposition. I really appreciate that, you going through it and how you're seeing it. Brian, for further information, what is the best way for folks to make contact?
Yes, I'd go to I invite investors to go, or potential investors to go to our website. It's very informative. You can see the corporate deck there. You can see the Gabon deck there, and really walk through our thought process of why we did this strategic move into Gabon. And then further from that, there's emails on the website to get through investor relations. Mark Friesen's our manager of capital markets IR, and he can answer all questions that any investor may have. Listen, I think Recon's at a really unique inflection point for investors to get in. We think our trajectory for growth here is remarkable. And in fact, probably one of the unique ones in the small cap space to get in with such growth in front of us. So I like what position we're in. I like the wells we're drilling. I like the portfolio that Chris has developed, and we got some great things ahead of us.
Well, Brian, Chris, thanks for coming back on to update. Wishing you guys the best of luck on success with the Kavango 1X well, as well as the new venture into Gabon. Thank you.
Thank you so much for having us.
Thank you, Andrew.